How to kickstart Europe's ailing economies. The EU presents its long-awaited €300 billion plan, but who will get their hands on the money? And is Google too big to fail? The European Parliament thinks so and may call for it to be broken up. Hello and a very warm welcome. You're with World Business Report. I'm Sally Bundock. Also in the programme, oil prices continue to slide ahead of tomorrow's OPEC meeting. We'll have the details for you. First of all, though, Brussels is expected to give more details today of a €300 billion scheme being seen as a cornerstone of its efforts to revive the continent's flatlining economy. The new Commission President, Jean-Claude Juncker, is trying to tackle one of Europe's biggest weaknesses, the very low levels of new investment by private companies. But will success depend on projects being taken up by those who are prepared to share the risks? Our Europe business correspondent Nigel Cassidy takes a look at one investment idea.
The London Underground already has more commuters than it can easily carry, but there's still a vast underused industrial area very close to Westminster that it simply doesn't reach until now. The EU's own European Investment Bank has just agreed to lend almost half the cost of extending the Northern Line to two new stations just south of the River Thames. It's the key to attracting commercial developers to build new homes, shops, schools, a park, a hotel and more. But the Vauxhall Nine Elms Battersea Opportunity Area could also be a blueprint for Europe, as it's the kind of transport and energy project that the Commission wants more of. But bringing landowners, planners and developers together can take years, as was the case at the old Battersea Power Station, so this is hardly a quick fix for Europe's flatlining economy. But as the project's prime movers see it, such infrastructure loans will be repaid in full if the business plans are sound.
This particular borrowing is underwritten by the European Development Bank, which is essentially a bank. So it's a banking transaction rather than a grant transaction. The entire borrowing for the Northern Line extension will be repaid through private sector rather than public sector. And all the other infrastructure improvements are funded through a levy that all developers have signed up to deliver on.
What investors now want is all the details. How can the EU package its proposals so as to multiply a fairly small EU investment into a €300 billion loan fund? At least here, high London house prices are keeping the developers happy. Now, the potential returns from this venture are huge. 20,000 new homes, 25,000 new jobs, none of which would be possible without a public partnership to open up the land and some loans from Europe to help build the railway. The question is, can this kind of plan be reproduced all over an entire continent? Nigel Cassidy, BBC News, South West London.
And we'll be discussing that story further when we review the papers in about 5 minutes. But first, let's talk about Google. Is it too big? Today, the European Parliament is due to debate whether separating out search engines from other commercial services offered by firms such as Google would help ensure a level playing field on the World Wide Web. The Parliament doesn't actually have the power to break up Google, but the proposal underlines the concerns of some EU politicians about American dominance of the internet, could put pressure on the bloc's antitrust regulators to take a stronger line against Google. The United States is saying politicians should not try to influence the EU's ongoing antitrust inquiry into the company. The Commission's been investigating the firm for 4 years now, but has yet to reach a decision. Well, I'm joined by Kevin Poulter, Senior Associate at Bircham Dyson Bell. Nice to see you again, Kevin.
Morning.
So just tell us exactly what's going on here, because we've got the European Commission investigation and the European Parliament seems to be wading in as well.
That's right. The investigation's been going on, as you say, for 4 years, and as yet, no conclusions have been made. It's into the antitrust and dominant market position it's holding, whether that position has been abused in any way. What the Parliament's trying to do is to apply that little bit more pressure. As you say, they can't actually force a breakup of Google. What they can do is to add some influence to the Commission and encourage them to start taking some perhaps more robust action. And we should be careful. Google isn't mentioned in the draft motion as it is. It applies across the board to all search engines and is part of the digital strategy for Europe, including roaming charges and various other things for mobile phones. But obviously, the big story is Google Google is being trying to be sort of cut back and cut down and put back in its place to a certain extent.
So how do we think this will play out? Because I must admit, listening to you, it sounds reminiscent of what Microsoft went through in the 1990s. Yeah. And it didn't go well for Microsoft, actually. It was a bit of a David and Goliath scenario, and we thought that Microsoft would be left intact, but it wasn't.
That's right. And we're similar. Actually, it's not quite the David and Goliath that it was then. We're seeing now that politicians are going to Google and seeking their support and their comments on policy, whereas back in the Microsoft days, it was probably Microsoft trying to woo the politicians. But you're right. Microsoft, I think, over a 20-year period, had billions in fines for breaching and abusing that position. Slightly different here, although there are several investigations, we should say, going on against Google. One in relation to the Android smartphone operating system, which comes preloaded with Google services. And it's a slightly different thing. We're talking about search results. There are any number of options out there for consumers to use any number of alternative search results. What we're seeing, though, is the dominance of Google services in Google's own results, which is probably not surprising.
And it's an all-round approach as well, isn't it? Because it's also looking at Google having to give information about who's searching for what and who's using what facilities. It's that whole privacy issue as well, right to be forgotten, etc., etc.
All of
so
these
it's a very broad look at Google on many levels. A lot could happen here, couldn't it?
There's been a lot of criticism over the past 6 months or so, ever since the summer, in terms of, we say, copyright, right to be forgotten. And with a change in leadership and a change in the European commissioners, the competition commissioner, it's now perhaps the way that the European Parliament is starting to swing their weight around and say we want some action taken.
All right, well, we definitely keep an eye on that. Thank you, Kevin, for making sense of this situation. The devil is always in the detail with these things. Now let's move on, because the Organisation for Economic Cooperation and Development, better known as the OECD, of course, is saying it's seeing the global economy as stuck in low gear. In its latest outlook, it says ambitious structural reforms are needed to boost investment, trade and job creation. So what does this mean for some of the key economies in Asia? Let's go to our hub there, and Rico Hizon is there for us today. Nice to see you, Rico. Tell us more about the conclusions. What does it mean for where you are?
Well, the Paris-based think tank says that China will edge lower in terms of growth, Sally, but there will be a steady economic recovery in the likes of India and Indonesia. Despite the slower growth, China will still lead global growth expansion in 2015 at just over 7%. This will be followed by India in the 6% range, and Indonesia is estimated to expand at around 5%. Japan, the most disappointing, Sally, growing by less than 1%. And I earlier spoke with Randall Jones, who is the OECD senior economist, and I asked him if Japan's outlook meant Abenomics had failed.
No, not at all. I would say that Abenomics has accomplished an end to deflation. We see inflation above 1%. We've got the tax hike through, and that's very important for Japan's long-run sustainability to finance government expenditures. But the real test of Abenomics is the so-called third arrow of structural reforms, and that will determine in the long run to what degree Abenomics is successful.
Well, Sally, on China, the OECD said stimulus measures taken this year will continue to support output growth, but property market activity remains weak. Sally.
All right, thanks very much indeed, Rico. We'll see you again soon. Let's squeeze in some other stories. OPEC members will have a lot to do and discuss when they meet tomorrow. The meeting is the most significant in recent years for the oil group, whose dozen members together pump out about 1/3 of the world's crude. Crude futures have sunk by over 30% since June to 4-year lows on the back of plentiful oil supplies, a strong dollar and worries about stalling energy demand in a weak global economy. Let's look at financial markets, and oil prices are sliding today, actually, on the markets ahead of that OPEC meeting. There's real concerns that there may not be as hands-on as thought in the markets. You can see a mixed picture, actually. If we quickly show you the close in the US, we had some surprisingly disappointing consumer confidence data out yesterday. I'm trying to get to the US numbers for you so you can see the close. Unfortunately, my little machine isn't working, so I'll have to just tell you the Dow was down just slightly, 3 points actually, and the broader market S&P 500 was down also 3 points. I'll be back to look at the papers. I'll see you soon.